Welcome to the podcast series, Small Business Survival Conversations. Through our weekly conversations, we hope to provide you with strategies and insights, knowledge and expertise to enlighten you as you work to build and grow your business. Here are your hosts, Anna Steinfest and Dr. Michael Troyer.
Hello, everyone, and welcome to Small Business Survival Conversations. I'm here with Anna Steinfest. Good morning, Anna.
Good morning, Michael.
Today, we want to talk about loan requests, winning that loan request, an important thing for all of you as small business owners to be thinking about. We're going to touch on 5 topics very quickly: how to prepare a business plan, how to make your financial projections, how to identify your investment and the collateral you're putting behind it, how to show your credit history, and then how to look around for the best loan opportunity. So let's start right back at the top.
That's right, Michael. And I have to make sure that our listeners know, full disclosure, I used to be in the banking industry for over 18 years. So I'm a recovering banker. And that's why my suggestions to talk about how to win your loan request, because we received a lot of questions about that. And a lot of small business owners are confused, especially when they talk about loans. It's confusing because if you're not doing loans on the regular basis, some of the jargons the bankers are using, it's unfortunate that you don't understand. So let's start preparing a business plan.
Want to emphasize right away, that's not a strategic plan. This is a different document than a strategic plan. You're meant to convince the banker that you're a good risk in this business plan. So what are the things we want to put in it on?
And the bankers really want to make sure that you have researched all the competitors. You have researched that what the money you'll be utilizing for the banker's perspective. Think about what is it for the banker. It's a low risk. So what they want to make sure they see in this plan is if they lend you the money, you will be able and you have the cash flow to pay it back. So you have to make sure that you include in this business plan more statistical data, more resources to make sure that the project you're presenting to them, they understand that it's a very well-researched project and it's a low risk. If you can remember these things, it will be a win.
And you might want to think about it in 2 ways. One is the external issue. If this is a project you're entering a new market, then they're going to want to know, for example, that you've looked at that market very carefully and you can explain why there's an opportunity there, who your competition is, as Anna just said, any data you can gather in terms of that. If it's internal, you're looking at a project like bringing a big machine that you want to install in your manufacturing plant or something else, then it's an inside, but it's nonetheless gathering of the essential data. The other thing they want to know is, why do you have the background for this? Why do you think you can be successful? They're going to provide you a loan if you convince them that you've got the background to manage the money and the project and make it successful. So those are the 3 things really that have to go into a business plan.
And we separated the second topic on your checklist is preparing financial projections. Now, this financial projections, they should go into your business plan, but we wanted to make sure that we separate it to make sure that we talk about this financial plan, because your business plan should include financial projections for the next 2 years. And those projections are forecast of your cash flows, outlays, and total income and balance sheet. I know that for some of you, maybe we've talked about in the past, balance sheet, income statement, we will revisit it down the road. But if you don't understand that, our recommendation is talk to your accountant. They know what the bankers are looking at.
Or go to the Small Business Development Center and work with a SCORE volunteer who can help you understand those things. There's lots of people who can deliver on that. What's important here is really challenging to think, how should I project where I'm going to be a year from now and 2 years from now? We call it pro forma because it's an estimate. And don't be afraid of that. You can do it, but you want to have some basis for saying, I think I can grow this business by 5% in the next year and then maybe 3% the year after. Well, you need to explain why you used 5% or 3%. Doesn't have to be lengthy, but you have to give some sense of of how you come. There's still estimates. So it's not that you have to be on the dime in terms of your estimate. You're giving your best guess.
And the bankers usually, they understand that is your best guess. And you have to understand that the bankers also, they understand and they know the trends on the market also.
And that's what they're looking for you to know, to show that you know those trends, that you looked at the same trends that they have, that you're that much prepared to go after this loan. So those are all important things. You're working with your banker. They have an understanding that you may not think they do.
The third thing on our checklist is identify your investment and collateral. Now, what do we mean by that? Bankers, they want to see that you're making some financial contributions as that show your commitment. And of course, remember, what is it for the bankers? It reduces the bank's risk to give you the money, to lend you the money.
And if you're putting some of your money into it, you've heard the old phrase, skin in the game. It means you put yourself at risk. You might lose if this doesn't work out. They want to know that you're doing that. So they're looking for you to say, well, I don't just want your money. I put some of my own money into this. That's very, very important. And that you also have the capacity in your own well-being, your own income stream from whatever other sources, that down the road a bit, if the business begins to take off, you can invest some more money in it. You're not putting it all in at the beginning. They're going to pay some attention to that as well.
Absolutely. So again, think about from the banker's perspective, reducing the risk. And Michael is absolutely right. In a lot of cases, the banks will not lend you money if they don't see that you have skin in the game, or if you do not put down payment, 5%, 10%, 20%, depends on the collateral and depends on other variables there. So
one more thing we got to touch on real quick, collateral. What is collateral? You might be putting up the value of your home, for example, your equity as a collateral. That is, they're looking for a little something. Okay, if this fails, how are we going to get, as a bank, get our money back? Well, part of your home value we may want, or there might be something else you can put up as collateral. Just to keep in mind, that's what we mean by collateral. It's something to back up the loan beyond your promise.
And in fact, we will follow up with some other episodes just to give you more the background and what the bankers are thinking and some other tools for you to implement. Excellent addition from Michael. Thank you, Michael. Yeah, you're right. We will probably expand on another episode. So make sure you listen to us. Number one is check your credit history. So bankers, they believe that the way you handle your debt in the past, that is a very good indication how you will handle your debt in the future.
And we'll be touching on that in a later podcast a little bit more in terms of managing that credit history. But how many credit cards do you have? How much total debt capacity have you already put out there in say, the credit cards you've got? They don't want too much. And if you're using too many, that may come back as well. So you need to know it, so that when you go in, you can talk to them and they know that you've looked at that. That's the most important thing here.
Exactly. And give them explanation, because you know what, as a business owners, you know that we have ups and downs. Mm-hmm. The year was off. You know what happened with COVID. Make sure that when you go and talk to them, you're already prepared. Hey, I know that this year I missed the payment and things like that, but this is what happened. They will see that you really understand what was happening.
The last one, to shop around.
Yes.
The important thing here is that you don't make the assumption that each banker has the same formula for calculating how much money they should loan to you for the given interest rate. Everybody does it a little bit differently. So you might get a better rate from somebody else. You ought to check with 2 or 3 to see what the best opportunity is going to be. How much collateral do they demand, et cetera? Any other thoughts on that shopping around?
Absolutely, Michael. Again, being in the banking industry, I will tell you that, the banks, they usually have, let's say, this quarter, we will focus on small business loans, lending only, and we will require only 5% down payment. The next quarter will be 10%. We have some other banks focusing more. We will give you, if you put 20% down, your interest rate will be like 2 points down below another competitor. So it's extremely important to shop around, especially for small business owners, because sometimes we open a business account. I mean, it's more on the business account, for example, but we will get killed by monthly fees.
Yeah.
We cannot afford that. So make sure you shop around, and we will have an episode, especially how to shop around and how to make sure that you select the winner banks for your company. And again, when you talk about, depends how big is your company also. If you're a small company, you may select some of the credit unions have awesome business offers. So we will teach you down the road. So Michael, I think we should sum it up.
Yes, a quick recap. Got to have a business plan put together, work your way through that, do it carefully. You want to lay out your financial projections for the next 2 to 3 years, be able to explain how you came to them. You need to have some collateral to invest and show that you're putting yourself into the risk of this situation along with the bank. Know your credit history before you go in, and shop around, talk to a number of different sources for those funds before you decide which one. There we are.
Yes, just remember these 5 things.
You've been listening to the Small Business Survival Conversation podcast. Make sure to like, rate, and review the show. And don't forget to join us next week for another episode. In the meantime, hook up with us on our Facebook group at Small Business Survival Tools and Tips. Till next time, thank you for listening.